So Kevin Pathrath, aka Meet Kevin, just spoke out against the media's coverage of the housing market. Last week, a couple of really important data points came out about the housing market for the month of March, but the media chose to only focus on one of those points. The piece they chose to focus on was that there was a 20% increase in house prices for the month of March year over year. When we say year over year, we mean comparing March of 2021 prices to March of 2022 prices. And the media was happy to cover this particular data point, but one of the things that the media failed to cover was the fact that this is what's known as a lagging indicator. A lagging indicator, if you're not familiar, is basically something that covers what happened in the past. Lagging indicators are really good at confirming trends, but they're not necessarily great at predicting them. In the real estate world, houses that have closed are usually lagging indicators by 1 to 2 months, since it usually takes at least 30 days from going under contract to actually close on that deal. That is why we're just now hearing about the March data. And the reason that's important is because the interest rates back in January and February were a lot better than they are now. Those who locked in their rate in February would have seen a lot better interest rates, because it wasn't until March that we started seeing 50 BP hikes by the Fed. On the other hand, people that got pre-approval letters in March and closed in April or May actually had much higher interest rates, which means that they wouldn't be able to afford nearly as much house as those who were pre-approved in February and January. But Kevin revealed to his audience that the mainstream media failed to cover the other data point, which is the FHFA home price index for the month of March. Now, there was an expectation that we would see a 2% increase month over month, but instead what we got was 1.5. Now keep in mind, this is all for the month of March, so even when we were doing really well in March, we were still underperforming expectations. Now I want to show you what's happened since then. Take a look at this consolidated MLS graph that has shown house sales and listings since the beginning of the year. Notice that we have a very high rate in March, but since then we've dropped off substantially. This is obviously giving us a very different picture than what the news media was covering. So increases in interest rate have obviously done their thing, but that's not the end of the story. A few weeks ago, we saw that the amount of houses contracted to be built were blown away by expectations. Now, the reason that's a big deal is because the more houses that get introduced to the market, the more that decreases overall sales price for houses in that general price range. So not only is there a decrease in the number of homes being sold, but there's likely going to be a decrease in the price for those homes being sold in the near future. Now, I'd love to get your all's opinion. Why do you think it is that the media chose not to cover that particular data point? Do you think it was intentional or just an indication that the news media doesn't understand the housing market? And remember, if you have any questions about real estate or wealth building, don't forget to comment down below. Or you can go to AskJeremySC.com. That's SC as in South Carolina. Thanks, guys. Have a great day.